In this video, I'm gonna be giving you guys my secrets I used to flip small accounts with. Now, I've been able to flip $300 to $900 in less than 24 hours. Also, $8 to $20, $100 to $500, and a whole lot more that I didn't record. And right here, I'm finally going to be exposing my secrets to you guys. Now, the big question is, what does it really take to flip a small account? Now, I'm going to be starting this off with a personal story of mine. Now, I remember when I started, I had just only $100, and at that time, $100 was all that I have. All I was trying to do at that time was to see how I can grow this $100 to something reasonable. Now, at that time, I was really just looking at Forex pair. I'm talking about GBP USD that I constantly trade right now, and even Euro USD, USD JPY, and Euro GBP. So I was more like consistently trading those pairs. Now, my strategy at that time is, if I see a particular currency pair moving in an uptrend, there was a way that I usually do check of it. But when I see the market is going in an uptrend, I'll just place in the buy and hope to catch in like few pips until when the trend seems like it's totally cutting off. So yeah, that was what I was doing for different pairs. I was doing it for GBP USD, Euro USD, or any pair, any Forex pair that that moves at least. So all I just want to see is price is consistently going up or price is consistently going down, and I'll just join the trend. And that was my strategy as of then. Now, I started trading with $100, which was everything that I had. Now, for my fellow Nigerians that are currently watching this, you could remember the good old days when $100 was about 42,000 naira, 43,000 naira. Back to the good old days, right? That was all that I had, and I deposited into my trading account, just catching some few pips, and I get out of market. And funny enough, that was what was working for me as of then. Now, all I needed to see is that the market is already in a trend, and I just get into the market to just scoop small part of that trend before the market continues. And slowly I was just grinding it out, doing it consistently, just checking in for different currency pairs to see if I can see something like that, because that was what I was able to learn as of that time. And funny enough, I was able to grow this $100 that I deposited into my trading account to $200. Now, seriously, at that point, this was crazy to me. Like, I just deposited all my money, all my savings, $100, and just grinding it out, I was able to make $200 with the little strategy that I had in my hand. Now, this point I want to say is when things really changed for me. Now, I remember I was in a Forex group where other traders were there and every of that thing, but I consistently hear some people see gold, XAUSD, they trade XAUSD, and I was curious, what is this XAUSD that they're talking about? What is gold? Like, come on, can you really just trade gold? So I started seeing some screenshots of some people when they're trading gold and all of that, and I was like, why don't I try it with the strategy that I had? Now, I saw that other people were trading gold, and I was like, why don't I trade gold? Like, I've literally gotten this account to $200. At this point, I could really just make my first $1,000 and be so happy. So just as everything, I opened my MT5 and I started searching in for that pair called gold. Now, I finally added in gold into my code section, but I never knew one thing. Now, I thought that gold was just every pair like other Forex pairs that you can just trade, but I totally got it wrong. Now, I can remember clearly when I opened my gold charts, just as every strategy I've been using on Forex pair, I try to put that same thing on a pair like gold. Get this, gold is actually a very volatile pair. Now, when I mean by volatile, it moves rapidly, like it moves fast. It could be in an uptrend, but it can swiftly change into a downtrend, and vice versa. Now, I saw that gold was buying, and I just hopped in the buy. And the worst part about this is that I was using a lot size that I use in normal Forex pair to place on gold. Now, for those that have traded gold, you can clearly imagine what I'm saying. And with all of those that I did, I lost the $100 profit that I made from the market, and also the $100 I got to deposit. And in this video, I'm going to be giving you the list of things you need to avoid that can really just hinder you from flipping a smaller account. Seriously, when I started out in the market, I wish I knew these things that I know now. But before that, let me tell you guys about FastBull. Now, FastBull is an all-in-one chatting platform where you get to access everything about the Forex market. I'm talking from economic news, access to their dedicated AI signals, and a full-blown market price chart. And the price for you to access all of this is $0. Now, with FastBull chat, you can easily change between time frames, and the time frame you get on here is not something you'll see on MT5. And the one thing I really love about this is that I can add in as much indicators as I want without being forced to pay a subscription like other platforms, as well as getting every information about the news in the market with just a click. Now, 1 star simply means low impact news, 2 stars means middle impact news, and when you see the 3 stars, which is going to be red, this simply means high impact news. So go ahead, click the link in the description of this video to start using FastBull. Now, the big question now becomes, what is the main thing that actually shifted me from being a losing trader to currently making thousands of dollars in the market? Now, I'm going to be breaking this down into 4 major pillars. These 4 major pillars are something that, if you apply them correctly, can easily get you profitable and also help you flip an account. Now, there are some things in trading that doesn't really meet the eye. Like, let me show you this for example. Now, if I ask you, what are you seeing in the market? You'll probably see candlesticks. Yeah, you're right. But seriously, at this point, you have to see the market just beyond that. Now, what could be the proper way to actually view the market? Now, looking back at everything, we can notice different trends. By the way, there are only 3 trends in the market: an uptrend, downtrend, or sideways trend. So whenever you're looking at the market, try to be observant of these 3 market movements. Now, the first shift that actually helped me to recognize clear patterns in the market was first discovering the trend. Now, it's literally the trend that determines whether you make money or not. If you lost money in the market, you probably must have been buying when the market is selling, or really just selling when the market is buying. Now, either way, if you had clear understanding on the direction of the trend, this wouldn't be an issue. Now, there are different ways that I can actually find support and resistance in the market, ranging from using price action, drawing in trend lines, and also using indicators. The best way to actually figure out trends in the market is using indicators. Now, why I don't really roll with using price action as much is because you're the one actually making the analysis. What I mean is that you could be drawing points and just naming it support and resistance without it being a true point of support and resistance. But when you're using indicators, these things are actually calculated. Like, for example, the moving averages. Now, if you've tried installing the moving averages, you'll get to a point where you have to insert a period or a length. By the way, both of these actually mean the same thing. So what the moving average does at this point is that it uses the value that you've imputed to start calculating the direction of the market. But how, you may ask? Now, you know this basic maths of mean, simply just trying to find the middle number. So let me use, for example, like from number 1 to 10. If I were to ask you, what's the middle number between number 1 to 10? Now, I'm sure your answer is going to be 5, because 5 is obviously the center number. Now, this same method is what the moving averages apply. Now, you remember when you were setting up the moving averages and it asked you for the length or period you love to use. So let's use, for example, I imputed my length to be 15. So what the market does is that from the length that I imputed, which is 15, the moving average is going to calculate 15 candlesticks and calculate the average trend. This is when the moving average draws a middle line that if price is above it, it now signifies that the market is in an uptrend, or if price is below it, it describes that the market is in a downtrend. Now, there are still other indicators that actually help you to find the trend in the market, but the one that I found the most efficient is the moving averages. That's why I use it and I currently stick to it. So this is actually one of the pillars that you'll need to know in order for you to flip an account. Now, if you thought that this one was eye-opening, I went further to break down something that really just keeps the eye whenever you're trading. Now, let me use this for example. Now, let's say you're preparing to go out. Let's just say you want to get something outside and you'll be back. You'll check for everything that you've been needing, getting it, and heading straight for the door. Now, upon opening the door, you find out that the door is locked. Now, at this point, what would you do? Obviously, the thing to do is to go back, get the keys, and open the door. Now, this exact same thing right here is what happens in the market. Let me show you what I mean by this. Now, back to what we said in the beginning, there are two trends, a downtrend or an uptrend. Now, let me show you exactly what I mean. Now, in this part of the market, we can see the market going up. Now, if you can notice from this side of the market, we can notice that the market is changing direction. So I'm going to be marking it because this is going to be very important. Now, let's play through to see what happens again. Now, if you notice, the market still rejected off of that same line, which means one thing: support and resistance. Now, some people don't know this, but support and resistance is way more important than the trend in the market. Now, let me give you an example. Let's say the market is going in an upward movement and the market got to a point of resistance. That resistance in the market can literally change the trend depending on how strong it is. Now, if it's very, very strong, this can literally change the trend completely. But if it's just like a light one, it can cause like a retracement. But still on still, it still affects the trend, right? Now, there are two ways that I always recommend finding support and resistance. Is both using indicator and also backing it up price action. So learning the basics of price action in terms of support and resistance is one good way to go, and learning a very good indicator that actually finds out support and resistance. Now, there are indicators that can actually help you find support and resistance. Now when you apply these indicators, it's going to take you from this level right here to this level. Now, the indicators that I actually recommend for you to use for support and resistance is number one, the Fibonacci retracement, right? Another one is the pivot point, right? And another one is the Ichimoku cloud. Now, make sure you try to learn one of these indicators that I've mentioned here, because this will actually take your support and resistance game to be so precise. Like, I mean, very, very precise. So make sure you try to learn one of these, because this is going to be very, very important. Now, let's say you're a hunter, professionally skilled, get any animal that comes his way, and that day you decided to head over to the Green Plains to go hunt for some deer. Immediately, you picked up the bow and the arrow to go for the hunt. And on making your search, you found something. Now, as a hunter, are you just gonna aimlessly shoot? Obviously, of course not, right? Now, I'm sure what you're gonna do is that you're gonna be timing that animal to when you actually make a shoot. Now, this is the exact same thing with trading session. Now, in case you don't know, the different trading session is actually the point where the market is most active. So, for example, we have the New York session, the London session, the Sydney session, and the Tokyo session. Now, the thing about this is that for each and every trading session, there's actually a currency attached to it. Like, for example, New York is a city in the United States, and the United States uses United States dollars. So whenever New York is in session, any pair that has the US dollar is actually a good pair to trade at that time. Now, for London session, two currencies are actually placed in this, which is the pounds and the euro. Now, for Sydney session, the currency pair attached to it is the Australian dollar. Also, the same thing for Tokyo, as it's the capital of Japan, so it's directly affecting the Japanese yen. So this is where you have to go ahead and time your trades. Particularly, the earth is not flat, so we don't have the same time. So you have to figure out what pair are you going to be trading, at what session you're going to be trading it in. Now, a quick Google search will actually give you the answer to everything. So you can simply just take out the time when each and every session happens in your own time. Now, once you have an indicator that shows you the trend of the market, you've gotten a very good indicator that can show you the support and resistance in the market, and you've already figured out the kind of pairs you're going to be trading and the sessions you're going to be trading. This is when you can finally go ahead with this. Now, let's use, for example, you want to deposit into your trading account, and the amount you're looking to start trading with is $1,000. Now, the question that might be asked during that point in time is, should I take this account with proper risk management, or should I flip an account? Now, what I'm going to give you right here is going to help you do both. You're going to be applying proper risk management as well as being able to flip your account. Now, there's something about flipping an account that is not majorly talked about. Now, whenever you're flipping an account, you're actually risking everything or close to everything in that account. If, let's say, you were to be up with one winning trade, you're going to have a large amount of profit, but remember, you're simply flipping an account. And let's say if you were to take another trade and the trade didn't go as planned, you're simply going to be losing it all. Now, this right here I've said is experiences of other traders. That's why I had to actually put this whole thing. Now, when you're depositing in the $1,000 What you're going to do is that you're going to be creating two separate trading accounts. Let's call this account to be account A, and let's call this other trading account to be account B. Now, your trading account A is where you actually have to apply your risk management. So you know the whole 1:2, trying to take 1:3 trades, trying to take 1:4, just proper risk management, right? Now, account B is the flip account. Now, this account is where you're going to be going crazy. You're going to be stacking in lots of entries in this account compared to your first account, because obviously what you're looking to do with this account B right here is to flip this account. Now, once you've already created these two separate accounts, it's now time to actually split the amount of money that we're going into to your normal trading, proper risk management and everything, and the amount of money that we're going into your flip account. Now, what you're going to do right here is that you're going to be splitting it by 80-20. 80% is going to be going into your normal trading account. Now, the 20% is going to be going into your flip account. Now, this is where you're going to be turning 5 loaves of bread and 2 fishes to feed a multitude. Now, once you finally split the amount of money that we're going to which account, this is the point where you have to know your strategy like you've memorized a book. Now, again, just like we said, when you're trading your normal accounts, you have to do your proper risk management. Now, my interest is in this account B, this flip account. Now, the way you're going to be trading on this account is very, very different from where you're going to be trading in your account A. Now, on account B, you're really just going to be filtering out trades. I'm sure you've already traded with your strategy. This point where your strategy is so good. At this point, you already know the kind of setup you see in your strategy, and you just be like, this is a 10 out of 10 trade. That anytime your strategy shows you something like this, 9 out of 10 times, you're going to see the market go in that direction. That is the kind of setup you're looking for to take on your flip account. Now, these are the kind of trade you're going to be taking in your trading account B. Now, the reason why you're taking trades that you're very sure of on this your account B is because you're actually looking to make 3 to 5 times what you have in that trading account. So let me use, for example, I'm looking at the chart right now, and I recognize a setup that I know so well. Not just a setup that I know so well, but I know that once this thing appears in the market, I know that the market is going to head towards this direction. Definitely, as you trade with your strategy, you're going to be able to recognize those points. Now, since I recognize this is actually a high probability trade, I'm going to be taking this trade on my flip account. Now, let's just, for example, I look at the market and I saw a trade that I recognized so well, and I actually take this trade with a $200 account. Now, and let's just say I made about $350 on that trade. Now, if you add in both the capital and the profit that I made, if you add 350 plus 200, that will give you 550. Now, here's what you're going to do. Now, on that flip account, you're going to be withdrawing the profits that you made, which is $350. You're going to withdraw that $350 and keep it in your bank account, remaining that $200, right? Now, again, what you did with that $200 is still what you're going to be doing again. You're going to be finding a trade that you're very confident with, a trade that is going to make you more money than you're risking.
Now, if you pair this up with 3 trades, you definitely recognize how much you're making from your initial balance.